Have you ever looked at a stock that's gone up, say, 10 times in value and just wondered how? How do analysts even find these things? Well, today we're going to pull back the curtain. Now, this is not financial advice. Let's be super clear on that. Instead, we're going to dissect the actual, rigorous process an analyst used to see if one company, BLS International, had that multi-bagger DNA. We're focusing on the how, not the what.
So here's our game plan. First, we'll look at the super strict checklist they use just to find this company in the first place. Then we'll figure out what they actually do. We'll look at what's helping them grow versus what could trip them up. We'll dive into the numbers, and then we'll finish with a serious reality check on that whole 10x dream. Sound good? Let's jump in.
All right, let's get right to it. The biggest problem for any investor is just the sheer amount of noise out there. There are thousands and thousands of companies, so how do you find the signal? Well, the analysis we're looking at today has a pretty smart solution, a really tough, evidence-based checklist.
I mean, this is the million-dollar question, isn't it? Everybody wants to find that one stock that just completely changes the game. But it's hardly ever about getting a lucky tip. It's about having a system, a repeatable process to spot the companies that have the right stuff for that kind of explosive growth.
And that system is key. The analyst behind this research uses a tough 15-point filter. It's like a bouncer at an exclusive club. It checks everything from industry trends to debt levels to the quality of their cash flow. It's a really high bar, and we're about to see exactly how BLS International managed to get past the velvet rope.
Wow, okay, so just look at all that green on the screen. This is why the company made it through the initial filter. It passed with flying colors. You've got strong trends in their favor. The founders still own about 70%, which is huge. There's almost no debt and a fantastic return on capital. But look at those last two numbers. Sales growing at 23% a year is great, but profits growing at 46% a year? That's the kind of thing that makes an analyst sit up and say, okay, I need to know more.
So the numbers look incredible. But what does this company actually do to generate that kind of performance? Well, it turns out it's not just one thing. It's a business with two pretty powerful, distinct engines.
Okay, so on one side, you've got their global visa business. If you need to get a visa for a trip to, say, Spain, you're probably not going to the embassy anymore. You're going to a BLS center that handles all the paperwork for them. Then, on the completely other side, they run this huge network of little kiosks all across India, helping people in smaller towns with things like banking, paying bills, and other government services. Two really different businesses, but they're both about scale and efficiency.
So, how does the money actually work? Well, it's pretty smart. They lock in long-term contracts with governments, and then they use a franchise model so they don't have to own everything themselves. This creates something called operating leverage. Think of it this way. Their basic costs are pretty much fixed. So every extra visa they process or every extra bill someone pays at a kiosk, most of that money drops straight to the bottom line as pure profit. The bigger they get, the way more profitable they become.
A great business model is one thing, but a great business model with a hurricane at its back, that's a whole different level. So let's talk about the big external forces that are pushing this company forward. This is the why now part of the story.
And man, these tailwinds are strong. You've basically got a perfect storm of good things happening. First, the post-COVID travel boom is real, and that means way more visa applications. At the same time, more and more governments are realizing it's just cheaper and easier to outsource this stuff. And then back in India, you have a growing middle class that's traveling more, and the government is pushing hard for digital services, which is exactly what their kiosk business provides. Both engines are firing.
Okay, so far this story sounds a little too good to be true, right? Well, this is the part of the process where a great analyst earns their pay. You absolutely have to take a hard, honest look at the risks. No story is perfect.
And here it is. This is the big one. According to the source, India's own Ministry of External Affairs recently banned BLS from bidding on any of its new contracts for 2 years because of some process problems. Their existing work continues, but wow, that's a major operational and reputational blow from one of your most important clients.
And the hits keep coming. That dependency on government contracts, it's a double-edged sword. They're also up against a massive global competitor called VFS Global. Then you find out that one of their key businesses gets around 60% of its revenue from a single client. That's risky. And looking further out, what happens if, one day, visas become completely digital? That could be a major threat to their entire model.
So we've got the good and we've got the bad. Now the big question is, are the financials strong enough to outweigh those risks? Let's do a quick, rapid-fire run through the numbers that really matter.
First up, sales, growing at an average of 23% a year. every single year for 5 years. That is just incredibly consistent and very, very strong.
But here's where it gets really interesting. Remember that operating leverage we talked about? This is the proof. Profits have been growing at a staggering 46% a year, which is double the rate of sales. That shows you, as they get bigger, they're getting exponentially more profitable.
This is so important. The founders, the people who started and run the company, still own about 70% of it. They have serious skin in the game. Their interests are perfectly aligned with every other shareholder.
Now, you might be wondering, are these real profits or just some accounting tricks? Well, this chart is the lie detector. The actual cash the business generated from its operations was even higher than its reported earnings. That is a very, very healthy sign the profits are real.
All right, here we are, the moment of truth. We've looked under the hood, we've seen the good, the bad, and the ugly. So now what? How does all this translate into actual future potential for the stock? Can it really be a 10-bagger?
So the analysis doesn't just give you one answer. It lays out a few different paths. In the bear case, the slow lane, if things go wrong, you could basically end up right back where you started. The most likely path, the base case, suggests the stock could return 2 to 4 times your money in 5 years, which is still fantastic. But that 10x dream, that's the bull case. And for that to happen, the company has to execute flawlessly, and the market has to fall in love with the stock and pay a much higher price for it.
And that's really the final verdict here. The analysis says a 10x return is possible, but it's not probable. It's sitting right at the edge of the most optimistic scenario. It requires everything, and I mean everything, to go perfectly right.
But to wrap all this up, the analysis leaves us with this incredibly powerful tool. It's called a kill switch. The idea is you decide before you invest on a specific rule, an unemotional trigger. If some key number breaks, like if profit margins fall below 22% for 2 years in a row, it forces you to step back and reevaluate, taking all the emotion out of the decision.
And that really leaves us with the final thought. Forget about BLS International for a second. The real takeaway here is about having a process and having discipline. So ask yourself, what's your kill switch? Not just in investing, but in anything. What's that objective line in the sand that tells you, hey, it's time to rethink this?